or your brother or your cousin or, somebody wanted to have a lemonade stand and you were helping. Did you ever think about when we all got together and we're like, oh, it's going to cost 25 cents and we're going to sell each cup for 25 cents? Did we ever do the math? Or was I the only nerd who thought about, okay, how much is it costing to make the lemonade and if we're going to be profitable? And I'm sure I'm not there had to be one other person on this call who wanted to know if it was going to be profitable. And no one's going to answer. At least type it in the chat because Cindy can tell me if you typed it in the chat. Like, yes, I wanted to know. Okay, well, hopefully we all had really nice parents and they gave us water, which means we could make ice. But let's just do some math. If each little cup of lemonade is 8 ounces and we're going to sell them for 25 cents, if we went to Walmart and got a bag of lemons, they'd be $3.92 and there'd be 8 lemons. Do the quick math, that's 49 cents per lemon. Then you need 6 lemons to make a pitcher. That's 49 cents times 6 is $2.94. I'm not going to read the whole thing, but you can see you need 19 cents for every 8-ounce cup of lemonade just for the lemons, and you need 11 cents for every cup of lemonade for the sugar. So when you add up that 19 cents and that 11 cents, it's costing you 30 cents to make the 8-ounce cup of lemonade, but you're selling it for a quarter. And we don't have any cups. We don't have any ice. We don't have any straws. This is just the actual lemonade. So because we're still, 6, 7, 8, 9, and we're selling this lemonade to people at church and our neighbors and our parents' friends, we can't just decide, well, I need to raise the price. We have to ask our parents, how much can we sell the lemonade for to make it profitable? So somebody please tell me how much we need to sell this lemonade for so we can make some money.
60 cents.
Okay, that would be good. That's a little more than double. So and I know, if you ask your mom, can you go to the park? She's going to say, ask your dad. And if you ask your dad, can you go to the park? He's going to say, ask your mom. So how likely is it that we can get both of our parents at the kitchen table during dinner to say, yes, we can charge 60 cents?
Well, what if we were able to get the lemons and the cups for free?
That would be awesome, but we're still in the hole 5 cents per cup because we got to spend 30 cents and we're only charging 25 cents. So we need to raise our price. So how likely is it that we're going to get our parents to both agree that we can charge 60 cents?
3%.
Actually, I think we need to charge $1. That's 4 times as much, right?
No, I mean that 3% chance we're going to have both parents.
Exactly. So this whole example was to get everyone to think about, this is freaking crazy. I need to make some money. How can I, after one Saturday, I'm going to be like, forget it. Let me go do something else that's profitable, like cut grass or babysit or something else. This is exactly what's been happening in the insurance industry for the past 4 years. It just came to a head now, and COVID didn't help. So I have some headlines from 2021 and 2022 that actually show, like AP News back in September of 22, they said that US insurance companies and associations say that California is risking a crisis in the nation's largest automobile insurance market by refusing to approve any rate increases for more than 2 years since the start of the coronavirus pandemic. And did you know there was a company called Lemonade? Most people didn't know. And by the time they found out, they left as well.
Wow.
Yes. So I'm not going to read all of these headlines. I'm going to give you a moment to read them, but I will highlight that Geico has closed all 38 of its agent offices here in California. And they also ended the practice of selling policies through the phone for agents in the state of California. If you notice, you haven't seen that many Geico commercials if you've seen them at all. And if you have your hand raised, just interrupt me because I can only see 4 or 5 people. So ask your question, please.
I'm sorry, I have a question. Are you just talking about home insurance or insurance in general?
Both, because
Okay.
they're connected.
Okay. I have people going working in Geico. I will call them to see what's going on too.
Yes, yes, yes. Geico left at the end of last year, beginning of this year. So they still have policies, but they're not doing any new business. So they're not showing any commercials. They closed all their offices. Anyone else with their hand up?
Yes.
Make sure you're not on mute.
So how does this affect us now? Having this insurance that we're having issues as a consumer?
Okay. As a consumer, with farmers in particular, the rate increase that we got back was 6.9%.
No,
So
no, no,
let's-
no, no.
So let's just say we're charging $100 a month. Now we can charge $106.90 per month. Now, if we look at that lemonade example, we basically need to be charging $400 a month, but we can't because we didn't get the approval for the rate increase. So without that rate increase approval, it's going to make it really hard for different companies to actually stay in California. So State Farm, instead of non-renewing everybody, let's say your policy was $2,500 for the year, your renewal will come back at $8,000 or $10,000 or $12,000.
Well,
They know you can't pay that. So you basically non-renew yourself and you go find somebody else to insure you if you can. So Farmers is still here. State Farm is kind of here if your renewal is affordable. Allstate is kind of here if your renewal is affordable. And depending on where you live, you may have to get a combination of the California Fair Plan because of the fires and one of a handful of companies that will give you everything that the Fair Plan doesn't offer. So these are headlines from 2023, just a couple of months ago in June. Any other questions? So
Who's
all
left?
who's left?
Who's still who's not affected? Who's left? Not left like leave. Who's
Oh,
still,
you mean like who will still write homeowners insurance?
yes, yes.
Farmers will.
Well,
That's how I got here. But you can still call State Farm and Allstate. Their main question is going to be, what is your address? Because if you're in a fire zone, the fire scores go from 2 to 20 in California. And the closer you get to 20, the more likely they're going to say no.
Well, that's everybody here.
Depending on where you are, that's true.
Okay.
Not Long Beach.
Exactly. You need a flood policy. Yeah. So everything that
That'd be
we're
fine.
talking about is public knowledge, and you can see it on the Department of Insurance website.
mm,
And it changes really rapidly. I mean, by the time we finish this meeting, the Department of Insurance website might change. But there are a handful of companies that will still provide coverage to supplement the FAIR Plan if you have to go in that direction.
I have a
Wow.
question for you.
Yes.
So, because that happened to me, they used to
Oh.
charge $900 a year.
Hmm.
Now it's $3,500 a year. So
You were lucky.
lucky.
And it
900.
doesn't seem like it, but people who were paying like $1,800 or $2,500 are getting bills back that are $8,000 and $10,000 and $12,000. So anything that's $3,000 or $4,000, at least it's upsetting, but it's realistic compared to 8, 10, 12. I had someone yesterday whose renewal came back at $40,000.
But isn't it true that you also have a deductible if you were to have a claim, which is a lot?
Yes.
So in other words, you have to pay upfront for that deductible?
No. Usually when you have a homeowner's claim, they pay you everything minus your deductible. So let's just say your house actually burnt down and your house was, let's make it even numbers, your house is worth $400,000 and
Uh-huh.
your deductible is 25%, then they will give you everything except the 25%.
But the
So-
replacement cost is only on the structure, it's not
Correct.
the roof, right?
On the what?
You're only being replaced for the expense of the structure, not including the land, correct?
Correct. The land won't burn up.
Right, I know. So what account or percentage are they gonna pay you?
It depends on your policy. If you have a 1% deductible, if you have $1,000 deductible, if you have a certain percentage that's larger. So if you have $1,000 deductible and your house was completely gone and your other structures and everything, you would get the 400,000 minus the 1,000. So you get a check for $399.
And then the next person who's going to buy your property, does that also affect them?
Yes, claims stay with the property, especially water claims.
So that could be a problem when you're trying to resell the property because the buyers say, I'm not buying your house. Your insurance is very high.
That's true. But we're going through cycles. So insurance always goes through cycles. And this is one of the ones where it's been a bit higher.
Hey, it's expensive to live in California.
Yeah, I have a question for you. All these raises and all these changes in the insurance is because of the fires?
Yes.
And so if it's because of the fires, and so do we the people that they live in back east that they have the hurricanes and all those natural disasters, are they having the same problem with insurance like we are experienced?
In Florida specifically, they have this thing now where you have to buy a new roof. We know new roofs cost like 30,000, 40,000. If you don't get a new roof, they won't insure you because your roof needs to be hurricane proof.
So what do they push us to have insurance if later it's going to make our life so complicated? And most of the time, like as Tess was saying, if you have a claim, let it stay with the house. I just was visiting a seller this weekend that they have an insurance water claim in 2015. They are having problems for insurance with insurance now, and it's almost 10 years ago. So it's like I'm sorry, I know you are not insurance
How long do records stay
commission,
with?
but
It's
But it's
supposed to
like-
be the most recent 5 years.
5 years.
So I'm not sure who pulled 10 years ago, but it should be within 5 years.
Okay, well, maybe it was 2019 instead of 15. Maybe I
Mhm.
was confused with that. But I don't know, it seems like I'm sorry, I don't want to offend you, but it seems like it's
Oh no,
scam.
no,
know?
it's the reason we have insurance is twofold. One is if you have a mortgage, your mortgage company knows that they can get their money back because if you just walk away and say, okay, forget it, I don't want to rebuild, you can pay off that loan. Number two is so you can rebuild your house. That's the only reason to have insurance. So when you see the people that were like in Alabama and Mississippi, Kentucky, when those tornadoes all ran through, and a lot of people were just so upset and devastated, those are the people who didn't have any coverage. They built their house, it's theirs. They figured, I don't need any insurance because it's my house, I paid for it. When you do that, unless you have the money in the bank to rebuild it, you end up with land and a tent.
Okay, so if you own your property, let's say that you pay cash, you are not, and probably it's a question also for Cindy, you are not
No,
required
you're
to
not
have
required
insurance,
to have
only if you have a
homeowners
There's no,
mortgage.
coverage.
there's no law on homeowners insurance.
No.
Oh, okay, so only if you have a mortgage because your lender would
Yes.
require that.
Right.
Okay,
Yes.
perfect.
Kind of like
Okay.
your car. You can
Yeah.
just get liability so you can get the 3,500 to have down payment to buy something else. But you don't have to have insurance, but you would need that 1530 minimum, for the state. But for your house, it's not required if you don't have a mortgage. But if your house burns down, you have to replace it.
So I can consider myself very, very blessed. I just received my renewal and it only went up $700.
There you go. Yes, you should be having a party.
Who do you have?
I
do you
am
have?
now. I don't want to say just in case. I don't want to. I'm kidding. Mercury.
Yeah,
Well-
actually, it depends on where you live. I just had a person call last week that was with Mercury, and they non-renewed his mom because she was too close to the fire. So instead of 1,900 for the year, they wanted her to pay 10,000.
Ouch.
Yeah. So we rewrote it. I rewrote it and got it at about 2,200. So
Okay.
yeah, so it just depends on where you are and who the company is. So yeah, you could be like 5 miles away from this lady and they're like, okay, yeah, we'll only raise your 700, but then hers, they added what, like $8,000-9,000 to it. So it's just strange. So
Well,
briefly,
Trevor,
oh, go ahead.
how do you see Hawaii affecting the rest of us, the rest of the country with its fires?
Well, believe it or not, the largest carrier in Hawaii was already leaving that state right before the fire.
Which was, don't say Allstate.
I'm not going to say who that was because that's public knowledge and I don't want to be the one who says
Come
that.
on, this is a small group. We can keep a
This is
secret.
a safe space. So
Yes.
But what I will say is this, you can tell the difference when you're watching TV, who actually has coverage and who doesn't. So when they're talking to those people and the person is shaking and they're like, we lost, it's because they don't have insurance. Think about it right now. If you were sitting here in this meeting and you found out that your house burnt down, if you have homeowners coverage, yes, it's a big inconvenience. Yes, you might cry, you might get angry, but ultimately you would be like, well, I have lots of use. Let me go find an apartment to rent or a hotel to stay in for a week till I find an apartment. And you're just a little frustrated because you have to change your life, but you keep going.
Hmm.
If you don't have homeowners insurance, that's a whole different story. You just can't even talk. You're shaking, you're crying, you're upset. It's like, what am I going to do? My whole life has just been turned upside down.
Oh, that's so heartbreaking.
Convince them to move to California.
So I almost can't even watch when they start talking about different places with the tornadoes and the fires because I can tell who doesn't have coverage. So let's talk about what proper coverage looks like. I'm going to make that really quick, but anything that I bring up, if it brings up more questions, please ask those questions. So does a standard homeowners policy cover earthquakes,
No,
floods, both, or neither?
neither.
That is absolutely correct. Whoever that was, we need to give you some ice cream or
Chocolates.
something. Oh, you like chocolate? Okay.
I'll take a banana royale from 31 flavors, please.
Okay. So, as we mentioned earlier, you do need a separate earthquake policy because it's for things that happen because of the earthquake. And I know some people will come up with this great idea. You know what? If we have an earthquake and it makes the pipe break for my gas line and then my house catches on fire, can I still file a claim on my regular homeowners insurance because it was really because of the fire? No, because it's going to be all over the news that we had an earthquake. And they're going to know that the original reason was that there was an earthquake. So if you don't have earthquake coverage, you can't file a claim because the fire was caused by the earthquake. And you probably ask yourself, do I really need flood insurance if I live in California and I don't live near the water? Well, if you didn't know, most tsunamis, when they hit, they can go inland 10 to 20 miles.
Right.
So you got to check on the map and see how far away you are from the coast. And if you live in the valley, you would probably want it anyway, even if your mortgage company doesn't require it because you're not in a quote unquote floodplain. Because when the water surges, it takes a while for it to go back out. And if you don't have flood insurance, you're going to be fixing that yourself. So we basically need 3 policies to have our house covered fully. 4 if we live in a fire zone that's really fire zone. So you would need California Fair Plan, someone else to, we call it a wraparound, to make sure you get your liability and your malicious mischief and all the other things that can happen to your house, the water damage or the wind and hail, earthquake and flood. So these are some of the claims that people have been filing. Now in 21 and 22, we don't have the information for that just yet because we all stayed at home. And even though we know that some people file some claims, we don't have that data yet. Now these numbers don't look that bad, but if you think about per 100, that makes it 77 million or 30 million. And this is general from the Department of Insurance website. But I want to talk about homeowners insurance. So we're going to look at that bodily injury and property damage line. We are all excited that COVID is not as bad as it was. So we're having a barbecue this weekend. We've got a pool in the backyard. We have guests that come over for the barbecue. And unfortunately, somebody drowned in the pool. And they couldn't revive them. So now they're gone. So the person who came to your party, their spouse is gone, they're going to file a claim against your insurance. You go to court, you get a judgment. And the judgment is for $1,030,324. So does anyone here have $1 million just laying around in the bank?
No, I have an umbrella insurance.
Awesome. You get the prize. You want chocolate too?
Yes.
Okay. So you think to yourself, if I don't have the money, well, where does the money come from? Because you're like, I don't have it. That means they can't get any money. Forget it. They're not getting any money. Forget it. Tough. Maybe I'm just moving. But let me tell you where the money can come from. So any money that you have in your checking account, savings account, money market, CDs, your retirement account, they can sell your car, they can sell your house. And if you have a retirement account, let's say it's $100,000 and you're not 59 and a half, 50% of it is taxes. So you would only get credit for 50,000. And at that point, you still owe a lot of money. So they knock on your door with a court order and they say, okay, we're taking inventory. We'll take your stove, your refrigerator, your washer, your dryer, your Louis Vuitton purse, your Air Jordan tennis shoes. And if you still don't have enough, then they take 25% of all of your future earnings. But I don't want to stick with doom and gloom. So let's talk about what Monica told us, because that's really the answer. If you're found liable for this person swimming in your pool, or if you're at fault for an auto accident that injures another person, or the other person dies, you'll have that $1 million because your umbrella policy will definitely cover that. And it will extend to other people in your house as well. Because we all know how teenagers love to be on social media. So if your teen got sued for posting a libelous comment online, your umbrella policy would cover that too. I know somebody has a question at this point.
I do.
Yes.
So an umbrella policy is on each individual residence that you own? Or one for the family or what?
Most companies require you to have your homeowners, your auto, and your umbrella, and it's for your house, the one house. You can get an umbrella for a separate residence, or if they're all yours, they can extend. But if you have rental property, you can get the umbrella with your landlord policy.
Yeah, that's how I have it. I have an umbrella. I had to do it for more than $1 million, but it
Exactly.
extends to the rental properties.
There you go.
And and the umbrella insurance is supplied by Farmers Insurance? Do they have it?
Yes, yes.
Great.
I have Farmers and several other carriers that I can look at for umbrella coverage. Just depends on the location and the situation.
Okay.
So one
Should
of
I
the
co-
unique things about Farmers is that unlike State Farm or Allstate, they are considered captive, so to speak, because they can only offer Allstate or only offer State Farm. Even though I work with Farmers, I don't only offer Farmers. So it's the best of both worlds. You get the big
Question.
names. Yes,
So back to earthquake,
yes.
they only offer that once a year.
No, you can get an earthquake policy whenever you want it.
You could.
Yes. You could just call me and say, I want an earthquake policy, and I'll run a quote and give it to you.
I get information from my insurance carrier saying there's a time limit. This is the only enrollment, basically an enrollment period. Otherwise, you're not able to. So is that specific to insurance carriers then?
I understand what your carrier says, and I understand that you get the letter once a year,
Uh-huh.
but it's not true. You can
Oh.
get earthquake whenever you want to. We can give you earthquake right now. It's not.
Oh, that's a little. Oh, look at that.
Yeah, you can get it whenever you want it.
Oh, that's
And
so
it's not that
crazy.
expensive as everybody think. I have earthquake insurance.
That's
And
very true.
it's not expensive at all.
So earthquake insurance, what happens with earthquake insurance is that a lot of agents don't go through all of the options that you can have. What they will do is put in how much your house is worth for the replacement cost. They'll put a 25% deductible and only put it on the dwelling and tell you it's $200 or $300. What I do is tell you all of the options, and we start, let me just pick a random number, 1,500. And then once you see all of the options, we take it down to what you still want and bring it down to where you want it to be or what's more affordable. But I feel like that's much better than just, oh, it's only $300. And then something happens and you don't have what you thought you had.
Mhm.
Yes.
Oh, wow. Okay.
Yeah.
So I have a question.
Yes.
Will you be going over prices in the area or is that more of privately?
That's a private question because we would actually have to get an address and a lot more information. So that's a case by case thing. But I will make sure that you have my phone number so you can call and ask those questions.
Yes,
so
if
then
you- make sure
could
you
I-
put it in the chat box so anybody who wants to reach out. Yeah.
I have a question. I
Yes.
might have missed you answering this. How long does a complaint, even if it wasn't filled, it wasn't satisfied, how long does it stay on your record? Like if someone calls up and says, oh, I think we have damage on our floor. I noticed that it seems to stay on the record, even though they change their mind and they don't want to make a claim.
Oh, yeah.
I'm going to have to find that out and get back to you, Valerie. I'm glad you asked that question because I'm not aware of people who call and say, I think I have this, but then they never file a claim. Because if you file a claim, that should be 5 years. But if you just call to ask a question, that shouldn't be on your home.
I've seen it more than once.
Okay. So I'm gonna call in and ask that because that just seems kind of strange.
Is it a question if it happens, or is it I had this situation happen and then we ask?
Yeah,
for
they'll
information and
call
not
up
follow
and
the
they'll
claim?
call
It's
up
like,
and say that they have a situation,
got
but
it.
then they never go through with it. Like they never get paid or nothing.
So they
ever-
call customer service and ask this question.
Yep.
Okay.
And then when they go to sell their house, this same thing comes up. And if they did it more than once, then it happens, it's there. It just seems to sit there.
Well, I will find out and tell you because right away, I would think they need to call in and ask, have there been any claims on my property? And if the person says, oh, we have this where the person called you, it's like, well, you need to delete that because it's never been there. That's what I would think. But I'm gonna call and find out exactly,
Yeah, they
especially
had
at
to write
Farmers.
a letter. They had to write several letters about
Mhm.
why they had called and what happened. It doesn't just go away, just to let you know. That's what I'm finding.
Because I think customer service must start something.
I have a question and I
Yes.
wanted to know your opinion on this. If a homeowner has a leak in, let's say, one of the pipe, okay?
Yes.
And obviously they file a claim, but it seemed like it's gonna backfire them later. So if they got an estimate from the contractor and it's just a small one, but then if they file a claim, one, obviously sometimes some of this insurance company seem to have a lot, like, so that it could be higher and then the estimate higher. But then at the end, as a homeowner, because it's now on your file, it's gonna affect you down the line, because if you decide to sell your property,
Mhm.
it's gonna affect you. What is your opinion on this? Is it
If you
wise?
have a $1,000 deductible and it's only gonna cost you like $400 or $500 to get it fixed, I say get it fixed and don't file a claim.
Yeah,
Because they're not gonna give you any money anyway. What they will do is add it to your record and make it difficult for you.
right.
Second, unless your claim is $30,000, $40,000, $50,000, don't ever file a water claim because water claims are looked at as negligence by the homeowner. Now, you and I both know that if your house was built in 1961 and you have clay pipes, at some point that pipe is going to collapse, especially right about now because it's been 62 years. That just happened to me, by the way. And instead of filing a claim, you need to call the Roto-Rooter people and find out which pipe collapsed, why did it happen, like what's going on, and then just figure out how you can finance fixing whatever you need to fix. But don't file a claim for that because water claims, even though it sounds crazy, insurance companies look at water claims as you were negligent because you didn't know there was something wrong with the pipe. If you live there and you see these pipes every day, every other day, you should know that something is not right with your pipe.
I have a question. When you said the water damage is looked at very strongly, but what if it's the pipe leak? What if it's a slab leak? That's something you are not seeing yet. How do the insurance company look at those?
I agree. I completely agree. But that is also why I did not file a claim last week. I do not have a water claim. I know. They look at water claims as negligence.
And how long does it stay?
5 years.
Okay.
I had a question.
Yes.
How do they determine how much to raise insurance? Isn't there like restrictions or regulations by the insurance commissioner?
The insurance commissioner gave everyone a 6.9% increase. With the 6.9% increase, there was a up to 42% that could be added to whatever your current rate is. And they could do it from 2019 to 2020, 2020 to 21, 21 to 22, 22 to 23. So the way that your renewal could go from 2,500 to 8,000 is because the 42% was done for 20, 21, 22 for each year.
Oh.
So even though on the surface, it comes back and says there's a 6.9% increase, it's really 42% over the past 4 or 5 years.
So is the crisis because the state won't allow them to increase
Yes.
their rates? Is that what's
Yes.
causing the entire crisis?
Yes,
So it's not the fires, it's the
it's
cost.
a combination.
Yeah,
So there's this thing where, of course, for 2 years, a lot of people just stayed at home and they drove less than 5,000 miles per year. Well, if you were doing that before COVID as an agent, and then you keep doing it, then you're charging not enough money for auto insurance. So if you start getting calls from your agent saying, take a picture of your odometer, please write down the mileage on your car now so that they can do the math back from what year it is or what year you bought it, that's what's happening. So it's not just the homeowners, it's all insurance.
right.
Yes, yes. And I want to make sure to tell everyone, if you have a customer or even if it's you, if you want to change your homeowner's coverage, don't cancel your current coverage. Call up whoever you want to call and get the quote and make sure that you wait 60 days to make sure you have them both. Even though it's quote unquote illegal to have double coverage in California, when you call to cancel the one you want to cancel, it can be backdated. So on paper, you wouldn't have had coverage from both places. But always make sure that you get the new coverage before you cancel what you have, because it'll be really hard to get it back. The other thing I want to say is that homes right now that are over $1 million for reconstruction costs have a 20-day underwriting period before they can even be bound. So there's 20 to 25 days where the underwriters are checking everything if the house costs $1 million or more to rebuild.
You really got to start that insurance right at the beginning.
Exactly. Like somebody says, I'm interested, I want to put in an escrow, you need to call me quick. Like, okay, let's see, how much is this going to cost? Because you'll be trying to close and you can't because you don't have any coverage.
Charmaine,
Yeah, that's-
if we have
Okay.
if we update, if someone updates their house,
Yes.
then how soon do you need to let the insurance company know that you've got your final sign off on your property, and then how soon do should you let the insurance company know?
The way the market is right now and just how things are set up with these 20-day, 25-day waiting, that's basically a month. So if you know that you need 2 months to get inspections and do paperwork, right at the beginning of your second month, that's when you need to be calling the insurance person. So that still gives you a month to make sure that you have a policy for the homeowner before you can close escrow.
Well, this isn't an existing property. So if the property already exists, you already have homeowners insurance,
Okay.
and then you do something to your property and it increases the value, when should
Oh,
you?
okay. So right after you finish the work, then you can call up and say, the new value of my house is this. And they'll just update in the system what the value of your house is, the reconstruction cost. They'll ask a few questions to fill in a lot of questions about a lot of answers as far as, do you have ADT, or do you have a swimming pool or trampoline, or there's this new thing I want to tell everybody about called Flume as well. But once they answer all those questions, they'll say, okay, now your new reconstruction cost is $525. And if your payment is in escrow, you have a choice. You can pay the difference and have your escrow pay the whole thing coming up, or you can have your escrow to pay the difference and then your payment will go up to cover what they just paid and moving forward.
I have a question, Charmaine.
Yes.
I have a client that told me that he was trying to get a quote for insurance. And the agent told him, just like you said, you can't have double insurance.
Mhm.
So he told him to cancel his
Never,
insurance.
never.
And then he did that. And then the insurance that he went with did not cover him because his house is right near a golf course.
Mm-hmm.
So you have to walk up to his house.
Right.
So I told him, I said, well, you need to call your insurance company and get back on. So I haven't talked to him, but I mean, what does that look like if he canceled his original coverage?
It's gonna be, because he's gonna have to meet their new qualifications. So it's gonna be hard.
Yeah.
But yeah, that's like my first thing. I don't care what they say about you can't have double coverage. You don't have double coverage. You're just asking how much would it be?
Right.
Right.
But so does that insurance agent have an obligation? Should he not be giving that information?
That is correct. That insurance agent should not be telling anyone to cancel
Right.
their policy.
Yeah. Okay.
And we all have E&O coverage, just like you do. If your friend wants to be mean, he could file a claim and get paid from the E&O coverage, because if he ends up with no insurance or he has to get the fair plan because this person told him to cancel, it's that person's fault.
Absolutely.
I just hope he has some kind of proof that that person told him to cancel.
Right. Okay. Thanks, Charmaine. I appreciate
You're welcome. Yeah. So I want to make sure I tell everybody about Flume. It's FLUME, and LADWP is sponsoring this device. It actually monitors how much water you're using, and it has an app that goes on your phone. It's called a whole home water monitoring device, FLUME. It normally costs $249, but right now LADWP will sponsor you so you can get it for $49. And once you set it up, you get back part of your money, so it only costs you $29. It'll give you around $200 to $250 as a discount on your homeowner's insurance if you have a whole home water detection device. So
Is
it
that-
will say,
Is
Go
that
ahead.
per month? Is that per month, the $29?
No, you pay for this device one time. And you put it on the meter that's in the ground in front of your house, the one that they check all the time. You strap it around it, and it talks to a device that's plugged in your house through Wi-Fi. And then it sends all of your usage to your phone. So a lot of people are getting what I call average bills because they're not really checking the meter. But once you're checking your own meter, LADWP can't just send you a high bill because they know that you know how much you used.
Oh, I need that number now.
So
LADWP, so it's not all the ancillary, water department.
Exactly.
Okay.
So just look up Flume, FLUME. And when you see it's $249, you're like, no, I'm not going to pay $249 for this little machine. Then you go to LADWP and you look for Flume, and you can say, oh, you have the rebate program. Okay. So you order Flume for $49. You fill out the rebate in the app. You get back your $24 and you end up paying $29 for it.
What is that again?
FLUME, Flume. It's like flame, but change the A to a U.
Flume.
Yes, Flume.
And what website you say to?
Flume.com, and then go to LADWP.
LA.
So you can see the rebate that they're offering.
LWP.
I have it pulled up right now, and and you said it's on the Flume's website where I can go
to get the rebate.
The
rebate comes from LADWP.
Oh, but it's not on Flume's website.
Right. Flume's website will give you all the info about the product.
I see.
It'll tell you what it does, everything else, and then it's going to tell you it costs $249. Then you go to LADWP to get it for $49 and be like, okay, thank you.
I would add something. Check with your water company, because where I live in Temecula,
Mhm.
we have a something similar device. It was put by the water department
Okay.
and it's free. I didn't pay anything, but everybody,
Okay.
you can really, really see very,
Mm.
very detailed where are you expending more water. So
Exactly. And
force
while it's
saying
while it's
something,
learning,
make sure that, yeah, the
while it's
water
learning,
company has it. Yeah.
uh-huh.
uh-huh.
When you
But
first
I want
go
to
ahead.
yeah, I want to ask you something about insurance again. Sorry.
Mhm.
But I was talking today to a client and he told me he lives in an area, like it's a little bit kind of, it has a land, it's open. It's not like in the tract home, okay? So it's area where they have 2, 3, 5 acres of properties. So we were talking today about insurance, and he told me that he used to pay $800, and now his insurance policy went to 3,500. But there was a fire in that area 2 weeks ago.
Mhm.
So that he needs, I believe that if they are going to reassess the area and they are going to put it like a high fire area, and he's going to be paying more. So if he wants to sell, do you think that that would be easy to insure the property, or shall we offer to the new buyer to take off the policy? How can we transfer, once that
Policies
is
are not
or not?
transferable.
So if
So it's
somebody
not
wants,
it's not a
go
matter
ahead.
of if it's going to be easy to insure the property. It's a matter of how expensive it will be to insure the property.
Yeah.
Yeah.
Okay. And another thing that I was talking today, I don't know what we were talking about insurance to one another, a different client, and he told me that he was looking into a property, and they say that insurance companies, because they're having a lot of issues, they're allowed to insure, which I believe that is wrong, but just only 100 homes per zip code. Is that true? I think that is really, really stupid and really low.
Okay. I'm glad you asked that question. It depends on the company, and
Okay.
each company is doing it different. What Farmers is doing is that in California, we can do 7,000 homes per month.
Per month. New
Yes.
homes, or you have to have that
Period.
inventory per month?
Period. We can write 7,000 homeowners policies per month. So
Okay.
when we run out, then like if it was already submitted because it was a closing, that's what the other reason to hurry up and say, go ahead and submit this. We can backdate it to whatever day you needed it, but we got it in early, or we can put it like whatever needed to happen to make sure it's part of the 7,000.
Okay.
So not only are people having to have to wait for almost a month to get the coverage, but if you don't make the cutoff, you won't get your coverage so like we're in August, you won't get the coverage till September if we run out of policies that we can write.
Do you usually run out?
We have when it was May and June. And there were a few people trying to backdate to June 15th or June 14th to make sure that the policy went through.
Is that something new, or it was always
Yes.
like that?
No. Yes, it's new. It's another
Wow.
tactic so that they can limit the risk.
So
And
when
we are talking about new policies that you write, right?
Yes.
No, the total policy for zip code.
Correct.
Okay.
So when
thank
would
you.
be the best time to get insurance? At the beginning of the year or the end of the year?
Now, it doesn't matter if it's the beginning or the end, because every I want to say every 15 days. It's almost like since we got to March, every 2 weeks there's another announcement about there's only this many policies, or to be really silly. I mean, they're doing things like if your paperwork doesn't have a plus sign in the top right hand corner and a minus sign in the bottom right hand corner and the letter P that's perpendicular to so we're like, okay, thank you. So it's like by the time you go back and forth with all of that, you have to make sure that you did it soon enough so that you meet whatever guidelines, you meet the cutoff, If there's only 6,000 next month, okay, great. You did it early enough. You got in on the 6,000.
Okay, I think we've gone way over our time.
Sorry about
Which
that.
is okay, because
Okay.
it's a huge thing. Does anyone have any last pressing questions they can't live without? Okay, well, let's thank Charmaine for joining us today and giving us all this information. It was very
You're welcome.
helpful.
Charmaine.
I'm going to
So much.
email
That was very
Cindy.
Thank you,
nice.
Charmaine. Thank you.
I'm going to email Cindy and make sure I'm going to find the email that has the rebate info in it, and then you can forward it.
Oh, that would be great.
I went
Thank
into
you.
the LA whatever
DWP.
DWP and I just Googled the word
Bloom.
Bloom, and it came, the very first one was rebate that came up.
Oh, okay, perfect. Then you have the link. You can send it. Okay, great. All right. Thank you,
Okay,
everyone.
thank you.
Thank you.
Okay, well, that concludes our class today.
Thank you,
Thank-
Cindy. Very
Thank you guys for coming and for asking a lot of really good questions. Because